I am talking to Bill Campbell, who is a portfolio manager for the global bond strategies at DoubleLine. Bill, great to talk to you.
Ed, thanks for having me.
So we're going to start this conversation off with you're telling us what you do at DoubleLine, what it entails. I know it entails currencies, bonds, the whole bit. Tell me about it.
Sure. Well, I'm the portfolio manager, one of the portfolio managers for the global bond strategies, which cover global interest rates outside of the United States, mostly the government interest rate curves, and currencies. So all liquid currency markets we look at. And in that capacity, beyond managing the investment side of the portfolio, we also make all of our investment decisions based on fundamental research. So I manage a group of analysts that do deep dives into all of the countries we're active in. And that is the basis for all of our investment decisions at DoubleLine for the global bond strategies.
And that's a great portfolio because, we were talking, I guess, last week before this call, and I just thought, you have an amazing understanding of markets from just a macro perspective. So we can really do soup to nuts about pretty much anything outside the United States. And of course, to the degree that you're talking about outside the United States, it's going to include the United States. So we're going to have a good, roundhouse conversation here today.
I'm really looking forward to it. I think there's a lot of interesting things happening now. So I'll leave it to you to decide where you want to start.
Well, yeah. Let me tell you where I want to start is that some people are saying right now, okay, because markets are up. A lot of times here at Real Vision, we talk about the 61.8% Fibonacci retracement level on the S&P and how that's a signal for some people that basically the worst is behind us. So the macro view, the macro view that this is supposed to be is that we had a short, sharp recession that was as a result of COVID-19 and the lockdown associated with that. And although it's been severe, we're coming out of that now into a V-shaped recovery. And this is going to be, a very cyclical response that you normally see. You have the problems that you see with any sort of cyclical slowdown, and now we're coming out of that. What do you think of that view? Because that's the view that's driving markets higher, and that says that markets will continue to go higher.
I hear the cyclical playbook, and I think that I agree with you. The cyclical playbook this time around has been anticipated for so long. In 2018. We were looking at everybody calling for the end of this cycle due to the Fed hiking rates. In 2019, it was trade. And then finally, we got COVID in 2020. The Fed came to the rescue along with all other central banks and fiscal authorities. We had a lot of capital deployed back into markets that had corrected fairly sharply. And, that cyclical playbook, I think, is brought a lot of this benchmark chasing behavior that we're seeing now. A lot of money that was initially worried is getting a little bit more comfortable that potentially this is a one-off shock. But I would like to just point out a few things. I think the first item is, I know people always like to say this time is different. And I would just say that, yeah, this time would be different in the fact that look at how fast this playbook actually played out if the cyclical playbook sticks around.